and the 18-month cycle is coming in very short at 15.2 months. So, now, by confirming the position of the 40-day trough as having occurred on the 12th of September, we are also confirming the synchronous 18-month trough. And we're saying that that cycle has occurred over 2 months early, almost 3 months early. So we need to be very careful of jumping the gun and saying, yes, we confirm that 18-month trough because we're going to make decisions on the basis of it. So we need to be careful. We need to look at the analysis and work out whether we really are happy with this analysis. I see there are some chats there. So let me have a look. Can you use one analysis, such as US dollar, to confirm alone another, such as the US TLT, I'm not sure what that is. If dollar falls, it implies TLT should also fall and the money goes to gold, euro, equities, etc. Yes, to some extent you can. That's a really interesting discussion, and I think that I'd love to come back to it. Let me see if I can finish the sort of current discussion we're having about influencing the analysis and actually come back to that, because that is a fascinating discussion, and I often use an analysis of the South African stock market to confirm what's happening in the US stock market, which seems like a very strange thing to do, but stock markets around the world often move in sync, and you can definitely use markets to confirm. Sometimes one market is much clearer than another market, so you can definitely use markets to confirm what's happening in another market. That's the sort of first part of what you're saying. Absolutely, I believe that you can. The second part of your question, in terms of where does the money go to, is a really interesting thing, and I have quite a lot to say about that, because I don't believe the money goes anywhere, and I don't think this money necessarily goes from one thing to another. I think it's possible that everything can fall in value, but that's quite a long discussion. So let me not digress now. I will come back to that discussion. I'll try and answer that more fully later. At any point, our discussion here has got to the point where I'm saying I'm not absolutely sure that this analysis looks good. Let's talk about this analysis and see how one should question an analysis. I am constantly saying that when Sentient Trader performs an analysis, it's really important that you are critical of that analysis. Seems like a funny thing to say for somebody who spent 5 or 6 years of their life developing a software application which analyzes the market, for me to tell you that you should be critical, but it is really, really important. Sentient Trader performs an extremely good analysis, in my opinion, but it is very important that you are critical of that analysis, so that Sentient Trader is not providing trading advice that could be improved on by your more advanced human brain. So that's why it's important to be critical. So this analysis looks good. And at first glance, how do we know? Well, because the prominent troughs, and here I'm just talking about the analysis since the most recent 18-month or 54-month trough over here. I'm only looking at the analysis that's happened since then. And you can see that Sentient Trader has positioned the 40-week trough over there. The first sign of a pretty good analysis is that a prominent trough, such as a 40-week trough, is in fact prominent in price, and you can see it is prominent. That looks like a prominent trough, and we can draw very nice cycle shapes coming into that. Okay, that looks quite good. Here's the 20-week cycle trough over there, and so we can draw another nice shape over there. It's a nice prominent trough. That 80-day cycle trough is a nice prominent trough. This 40-day cycle trough, interestingly, is not. It's slightly displaced. You can see that the prominent trough actually happened here, and the 40-day cycle has been placed a few days later, which might cause one to question things slightly, but it's not too critical of a problem. Okay, so that's the sort of first rule of thumb, is that prominent cycles should have prominent troughs, obviously. Okay, so at first glance, this looks pretty good. But now let's go into a little more detail, and in order for me to go into a little more detail, let me turn on Sentient Trading Method. Sentient Trading Method plots the sentient wave shapes, an aspect of the user manual which you must take a look at. It's been recently updated and explains the sentient shapes in a good deal more detail, so take a look at that. And basically, an indication of good analysis is that there are no inverted shapes. It sounds very simplistic, and well, it is. It's a very easy way of taking this. So here are the shapes. This shape here is a bull B, which means that this 40-day, 40-week cycle shape, which is that shape over there, is the shape of a bull B. And here's a 20-week cycle shape, also a bull B. And we can see that shape over there. And here is a bear D, and so on. I won't go through every one of them, don't worry. So there are all the cycle shapes that are plotted at the bottom of our chart. Now, if we have a look at those cycle shapes, you can see that at this scale of magnification, you cannot see a single inverted shape. None of those shapes are inverted. That's actually a really good sign. That means that this is potentially a really good analysis. Let's zoom in and see if we can find an inverted shape, just to get an idea of where the analysis begins to fall apart. And here is an inverted shape at the 20-day cycle level. That's an inverted bear. An inverted shape at the 20-day cycle level is not bad at all, but it is an indication that perhaps the analysis is not absolutely perfect at this point. So far, I'm feeling pretty confident about this analysis, and it looks fairly good. However, the next thing that one should do is see whether the analysis really does follow some basic sort of guidelines of Hurst cyclic principles. And one of the basic guidelines is that troughs of cycles should occur when price drops below the FLD line for that particular cycle. Okay, now we can plot FLD lines for a whole lot of cycles, okay, and we can make our chart look really messy and you're not going to know what's going on, so that's not recommended. So the better approach is to do them individually. So let's do that. Let's start with the 54-month cycle, and you can see that the 54-month cycle FLD, which is this line, FLD stands for future line of demarcation. It is a cyclic tool that one uses to perform an analysis and to make trading decisions. You can see that the 54-month FLD peaked over here, and it was above price, and where the FLD peaks is roughly where you expect the trough to occur, and here we have a trough of the 54-month cycle. Let me just turn on my whiteboard so that I can show that. Here is the peak of the 54-month FLD, which indicated that we expected the 54-month cycle trough to occur around about this time, and here we have, of course, the 54-month cycle trough. So there's a little bit of displacement, but not very much, so that looks pretty good. Okay, so that's a really good placement of the 54-month trough. So I'm confident about the placement of the 54-month trough over there. Let's zoom in and take a look at the 18-month cycle FLD. There it is over there. All right, the 18-month cycle FLD at our most recent cycle was also, the FLD was above price. Let me zoom out again. Here we go, and here you can see the peak in the FLD. There is the trough in the cycle. Of course, it's synchronous with the 54-month cycle, so let me not dwell too much further on that. And we have not had another a trough of the 18-month cycle. But now I mentioned that if this trough on the 12th of September is indeed a trough of the 40-day cycle, as it seems it is, then we are also confirming a trough of the 18-month cycle over here. Now, do you notice something here? That is that price, when it formed this trough, is above the 18-month FLD. I'll draw over it with this orange pen so that you can't really see it anymore. But here is the 18-month FLD, and here is the price at the trough. So if we confirm this as a trough of the 18-month cycle, then we're saying that at this trough, price did not come below the FLD. Now, it doesn't absolutely have to. There are oftentimes, I wouldn't say often, there are sometimes occasions in a good analysis where price will not fall below the FLD. But those are the exceptions rather than the rule. So if we have an exception rather than a rule, and we have an 18-month trough that is potentially being confirmed 2 to 3 months ahead of its time, then we really need to be careful, and we need to have a look at this analysis and see whether maybe a Sentient trader's got it wrong. Maybe we need to do something a little bit differently. So let's zoom out and let's have a look at the analysis here. You always start with the longest cycle when you're considering an analysis, as I have done, 54 months down to 18 months. So now let's consider the 40-week cycle. Let me turn on the FLD for the 40-week cycle, turn off the 18-month FLD. Now, here is the trough, the last trough of the 40-week cycle. And you notice something happened here as well. Here's price, and the trough in price did not come below the 40-week FLD. There's the 40-week FLD, which is below price. That is another discrepancy, if you like, in our analysis. That's not perfect Hurst analysis. Now, I mentioned earlier that, of course, the 40-week cycle has been positioned at what looks like a prominent price trough. Yes, that's absolutely true. It is a prominent price trough. But here's the prominent price trough over here. It seems like a sensible placement, but price has not fallen below the FLD. So we should probably question it. Okay, and we should say to ourselves, is that really the trough of the 40-week FLD? Now, when you start becoming more experienced in Hurst cyclic analysis, you will begin to learn that most of the time, the most prominent price trough is indeed the correct price trough to choose. But sometimes, the most prominent trough is not the right price trough to choose. And this is where Hurst cyclic analysis becomes really exciting, because you can take a look at the subtleties and really improve upon your analysis and sort of refine your techniques. So let's have a look at where the 40-week trough might have been better placed. Well, the answer is obviously where price came below the 40-week FLD. Did I say 40-week? 40-week FLD, 40-week trough I'm looking at here. And of course here, price came below the 40-week FLD and then bounced up back above it. It's a pretty insignificant little drop below the FLD, but it does qualify as a price below FLD. Doesn't have to be a huge amount, but so it does qualify. So is it possible that this trough over here is in fact a trough of the 40-week cycle? Let's consider that. Let me turn off my whiteboard. How do you consider it? You consider it by turning on the measuring tool, press the control key, and measure from the most recent trough. And you will see here that that price trough over there occurs 252 bars, 252 days after the previous 40-week trough, and the actual length of that cycle would then be 36 weeks. Now, that is in fact a slightly short 40-week trough. The exact average length of a 40-week trough is 273 days. So in fact it's still 3 weeks short, 21 days short. So yes, the 40-week trough could in fact be placed over here. Now, if we placed the 40-week trough over here, then obviously that's going